Hello, traders. It's 8:01 a.m. Chicago time on Thursday, the 30th of April, 2020. It's the last day of April. Hopefully, it was a good month for you. A lot of crazy things this month. This is episode number 1745, barreling our way to 1800. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, overall allocation, market allocation so far this session has been to safety, except for crude. Crude is popping higher, still battling the $17 price figure. This is on the June contract. The Bund, that's the leader today in the on my quote board. The Euro Bund is up 83 cents. ECB had its rate decision and conference this morning and is very dovish, as we would all expect. The 10-year note is up 8.5 ticks. The Treasury bonds are up 9 ticks, and gold is up $1.80, trading at $1,715.20, up 0.11%. The laggard this morning is the Russell. The Russell's been just running away. It's had a high beta compared to the other indices. The Russell's off 36 points this morning, or 2.7%, excuse me, followed by the DAX. The DAX is down 142 points. The DAX is trading at 10,973, 1.28%. The S&P is off 31 and a quarter points, or 1.06%, currently trading at 2909, and that's where the market stands currently. So overall, markets come off. It has tested higher. The S&P had pushed through some key areas yesterday. A lot of it was supposedly driven by the news from Gilead, which came in before the market opened, with the prospect and the expectation, the market expectation essentially, that we are likely to start opening up here in May in terms of getting people back to work and the economy back online. So that's where we are. However, we remain in a pretty important area, confluence area here in the ES, and we'll go over that in a minute. So what do we have today? My monitors are acting funny. So let me see if I can bring this way up. It's not working. So for in terms of what's ahead today, actually, let's cover that. There was a lot that came up that came out overnight. Japan consumer confidence came in lower than expected. France GDP came in at negative 5.8. Wow. Expected at negative 3.2%. Spain GDP came in at Q on Q came in at negative 5.2, expected at negative 4.4. Eurozone GDP Q on Q came in at negative 3.8, expected at negative 3. Not too bad. Personal income, personal spending in the U.S. came in. They were worse than the negative numbers that were projected. Jobless claims, initial claims came in at 3.839 million versus, again, higher than the expected 3.68 million. Those numbers have been slowing down. The prior week was 4.4 and so on and so forth. So remember, just as a frame of reference, this number, initial claims, usually from week to week, usually comes in at about 190 to 200,000, and we're still dealing in terms of in the magnitude of about 4 million. And so that's where we stand. We get Chicago PMI at 842 for subscribers, 845 to the public, expecting 36. The prior's 47.8. 47.8 is the prior. The expectation is 36. That may move us around a little bit. And that's what's expected for today. In looking at what we were looking for yesterday, the primary scenario was for a choppy open, a market that is likely to be imbalanced, out of range. Expected a dip into the prior range, maybe down to 2,900 or through to 2,895. But ultimately, I was looking for the market to push through and into that 3975 composite low volume node, potentially 2950. That was the primary scenario. The secondary is we fall through, FOMC comes in, and we dip all the way down into the 2871.72 area and potentially all the way down to 2860. That did not happen. And then the third scenario is a dip. We get our feet wet into the prior range, which has a thin profile up top, and then we have an impulse up, and then we have a trend day up. Let's look at which one was dominant. Here's what the market has done. We opened up just above the prior range. We dipped our toes in and we pushed up into a trend. This could be seen as scenario one or scenario two, three. Really, it looks to me like scenario three as the rotations kept getting these quote unquote impulses up, nothing really big. And we pushed through the 29.39. The key areas yesterday were 29.18. This is the big 62% fib. 29. We had or 29.23 is the fib. 29.1875 is the MC point of control, and then 29.3975 is the composite low volume node. And it has kind of squeezed through. We see it flutter here at the fib and the MC point of control, but really it just continued pushing higher. And at 1 o'clock, we saw the market dip a little bit, take a small dip, pulled back to where? What's this blue line again? Right here. Yep, that's the mid yet again. The mid's in play again. I've always talked about the mid. I don't think I've seen anyone else do. The mid, it comes back to the mid, and we take a bounce. This entire move up on the 15-minute is basically an impulse. So this is an impulse pullback to mid continuation, and we managed to get the continuation. As you can see, the 29.4450. So how is this trade? How would this trade be structured? The trade would be structured as pullback to mid. Your key target is 2 ticks above the last high. Standard stop, which is currently at about 4.5 points, and look for leave a runner on for the continuation, and the continuation would take you would target the next level up, which would be 29.4875, as you could see here with these stock zones. And it got to 29.47 and a quarter, missed by about 6 ticks before it pulled right back to VWAP on the close and closed relatively strong. Yesterday was a normal variation day, almost a trend day, really. The volume was pretty decent at 1.25 million. And we ended up closing right on top of the MC low volume node. There's some kind of synchronicity there. And so that's where we stand. The point of control outside of the IB, just above the midpoint. We did not have a point of control at the top, but we did continue higher overnight. So as we switch and look at the, hang on, feel exhausted this week. As we look at what the extended session has done, it has pushed through immediately, pulled back to yesterday's point of control. We got a little bit of a continuation, and it has been kind of sitting sideways until about 4 a.m. Chicago time, which is when kind of the European session slows down a little bit. And the profile overnight shows that we've got pretty good volume, 421,000. And then we saw a dip on the ECB announcement. Not sure, the market really was looking for, the expectation and the marginal lending rate and the deposit facility rate are unchanged. The marginal lending rate in the Eurozone by the ECB is 0.25%. And the deposit facility rate is still negative 50 basis points, or negative 0.5% is the way to say it. And the interest rate is at 0%. But the news conference was dovish, but it didn't bring in something that the market expected. But overall, it took a kind of a negative turn and has pulled back basically to 2,900. And we've taken back all of the positive delta the overnight session and are now negative. So we're looking kind of heavy coming into today's session. Okay, let's take a quick look at CT Bookmap. Again, you can get this at ctbookmap.pro. There's a free trial on it. This is my execution platform. It's got a dome right in here and order capability. So to me, once I've developed a bias, once we're in an area where I'm engaging and stalking, this is the software I use to engage the market. So I can see where the liquidity is. The darker areas, meaning not the darker, the brighter areas, the scale right here, as it moves to the right and becomes more and more red and maroon, it shows that on a relative basis, based on what we see on the screen, those areas that are most red and are brightest have the highest liquidity. And it gives us an idea of how long that liquidity's been here, so we can see if this stuff, the resting bid or offer, are spoofing bids or offers, or they've been there a while. The more they've been here, the longer they've been here, the more likely they are to trade through. It doesn't mean that the market will stop and turn there. It just means that the size there can be relied on a little bit more than what a dome shows. Even those platforms that freeze it for a couple of seconds don't show that level of detail. So anyway, on the overnight session, we pushed into this 29, 29. Hang on. This 2965 area had liquidity up here for most of the session. We pushed into it. We came right off. And as you can see, this usually is a scalping opportunity for me. As price goes down, the liquidity goes from dark to bright to bright to bright to brighter. Usually there's a little pop up above. There's a zipper right here that provides resistance, which held, and then it continued lower. And as it continued lower, again, the liquidity got brighter and brighter, and it provided an even higher pop. But overall, that failed to hold. There's some sincerity in the selling there. As you can see, there are bigger and bigger dots as it got into the liquidity below. And here we are. Currently, it seems like the bids are trading out. The bids are trading out on the buy side. It seems like as the market is falling, look at this cluster right here. You have aggressor sellers, somebody hammering on this liquidity that's sitting here, causing these big dots, which are collisions, which I call collisions. Yet the price isn't slipping through so easily. It's still bouncing. Again, we see a cluster of selling into liquidity. Again, more collisions, and price kind of fell through, and it's not really running away. It's not really slipping. So what this shows is there's an element of buying here on the drop, in my opinion, and that's what it looks like to me. It looks like somebody is buying at each of these strike prices: 29, 20, 15, 10, 5, 2900 right here. So you can see this liquidity shows up at every 5 points. Those are option strikes. and it's the volume is trading out, the liquidity is trading out, causing the overnight volume to be relatively high. So that's where we stand in terms of what's above and below. The next liquidity pool is down at 2,900, as we would expect at the century figure. Below that, 2,893, which coincides with a stock zone. I expect a bounce down here if we test it on the open. This is the area that I expect buyers to step in and for us to bounce from. There's a little bit of confluence in that area. And that's what I'm looking. That's what it seems like the market is likely to do this morning. Above us, 28, 29, 28, 29, 29 has the standing liquidity. So remember that picture when we get back to when the market opens. Remember where the liquidity is if you don't have the software. So what are we looking for this morning? Let's move into our current expectations for this session. Here we go. Current expectations, we have an internal gap against yesterday. We are below yesterday's price, below yesterday's value area and the point of control. We are pushing into 2,900 this morning. I'm expecting an open auction in range. This is the most common opening type. Response, I'm going to be stalking in the 29, 20 to 25 area where that liquidity was. The bigger liquidity was at 28 right in here, 28. Okay, so any push into 28, I'm going to be stalking to look to get short. I'm looking for it to fail over, and I'm looking for the overnight low to be taken out as part of the overnight statistic historical probability, which is around 98%. Consolidate here at the 2,900 and then give it up. And I'm looking for this area below that, 2892, where the next liquidity pool is at 2893 to provide a little bit of a boost. And then coming into the month close. This is the month end day, and that brings us into the close. And then from there, I'm expecting it to pop higher, most likely. Okay, so look for selling opportunities on responsive buying. Look for the overnight low to be taken out, the 2,900 to be tested, potentially into 2892 before the bounce. That's the main trade idea for today. Again, this doesn't mean that I'm coming in with a bias. I don't want to come in with a bias, but if the market turns, I have a plan for what to do next. As I've used many times the analogy to being a Marine, being a soldier, the first to enter a new field of battle. We don't know what the opponent's going to do, but you need to know what path you're going to follow, what objectives they're likely to be, and then that way, when we respond as traders, we're not getting in at 28 and then as soon as it pulls back and bounces back up to our entry price, we're closing the trade because we see that there's a clear path if that 28 holds and where that path may lead. It may or may not be right, but coming in with a plan is better than not having a plan at all. And these are just plans. The market still has to prove them. We still listen to what the market says, and many people resist the fact that I do these scenarios, but I don't care. They're not me. They can do what they want, but I'm explaining to you why I do these scenarios. It's an important part of holding on to these trades and letting them work. The secondary scenario is just a continuation of where we are. Consolidate at 2,900, dip into 28, 92, 93, take a bounce, get back into the range, and then start pushing towards this 29, 24, 25 area to consolidate and hold steady, bringing the point of control down in either case. I expect us to have a lower point of control, and I expect, here's an important one, I expect the S&P to round out up here. We are pushing against some key resistance up here. I expect it to round out and rotate down into the mid 2800s. I'm not a swing trader, but we're coming into the end of the week. At the very beginning of the week, I talked about the very, very likely push into 2900 when we were much, much lower. That 2900 is on deck, and most likely 2918, 2939, which got hit yesterday. And I expect the market to roll over from here a little bit. I don't know to what extent it can move. I have to look at the MC point of controls below. Below us, let's see where those are here. So those are the main scenarios. Key area 2789 below, 2860, 2829, and 2789 below. Those are the key swing areas below, in my opinion. Anyway, I'll leave you with that. We're coming into the end of the month. Please be careful on the close. And hopefully you've checked out, by the way, hopefully you've taken the time to check out EdgeClear, edgeclear.com. It's a brokerage that was launched by my team and I. I'm 100% owner of this entity. It's a futures brokerage, and I hope you support it by joining and trading through us, since everybody's got to trade through somewhere. If you're trading futures, I hope you choose to join us. Take care, and I'll catch you soon. Take care. Bye.